Okay, I think we're now live. So I'd like to welcome all councillors, officers and members of the public view on YouTube to this meeting of the Corporate Audit Committee. My name is Councillor Mark Elliott and I'm chair of the committee. I'll now call out the names of the other members of the committee and ask them to confirm that they are present. I won't call Councillor Andrew Furs because I know he's going to be late, so he is not here yet. Councillor Colin Blackburn has also not managed to arrive yet, I don't think. No. Subbing for Councillor Lucy Hodge is Councillor Mark Roper.
Present, yeah. Hi.
Councillor Brian Simmons.
Here.
And co-opted member John Barker.
Present, here.
Also present are Democratic Services Officer Emphas Hughes and other officers who will introduce the reports as we make our way through the agenda. Councillors agreed a protocol to cover virtual meetings, and this meeting will operate in line with that protocol in accordance with Coronavirus Regulations 2020. The meeting has the same status and validity as a meeting held in the Guildhall. Can I remind members and officers to keep background noise to a minimum, to only speak one person at a time and not to speak over others. Please mute your microphones when not speaking and then unmute when I invite you to speak. Please indicate it if you wish to speak by using the chat facility on Zoom by typing MIS, may I speak, and I will call you to speak in turn. Should the committee need to take a vote, I'll read out each member's name in alphabetical order. Each member should then clearly state for, against, or abstain. This will enable the Democratic Services Officer to accurately record the vote and will also ensure that decision taking is clear to the public who are viewing on YouTube. Does anybody have any questions? Great. In that case, let's continue. So item 2 on the agenda is apologies for absence and substitutions. As already declared, we've got Councillor Mark Roper substituting for Councillor Lucy Hodge. Thank you for that, Mark. Are there any apologies for absence apart from Lucy?
No, there aren't, Chair.
Thank you. So declarations of interest. Does anybody have a declaration of interest they'd like to make? Obviously, if any of them, any occur to you during the meeting because of an item that comes up, then please shout at the time. Item 4, urgent business agreed by the chair. I'm not aware of any. Emphas, have you been made aware of any? No. So we can move on. Item 5, items from the public. I am not aware of any items from the public. No. So item 6, items from councillors and co-opted and added members. Again, I'm not aware of anybody raising anything before the meeting. Anybody wish to shout now? No, great. So we're on to minutes from the 4th of February 2021 meeting. Those are on pages 5 to 10 of your reports pack. Minutes have been circulated. Does anybody have any corrections they'd like to make to those minutes? No. Would anybody like to propose them as an accurate record of the meeting? Councillor Brian Simmons, thank you very much. Anybody happy to second? I think, John, it would be really good if you did, because I don't think there's anybody else here who was present at that meeting other than me. You happy to second, John? Oh, well, you're on mute. So
yes, I'm happy to second them.
Thank you very much. Good. I think we can accept those as an accurate record of the meeting. Thank you. The item 8 is the Audit Assurance Annual Report for 2020-21. So I'd like to invite Andy Cox to present the report, please.
Thank you, Chair. This report details the year-end position regarding internal work carried out, and it basically summarises the audit performance for the year, highlights any key issues to the committee, and finally, at the end of the report, provides the Chief Audit Executive's opinion on the Council's internal control framework. The committee approved the Internal Audit Plan 2021 in July 20. As previously stated, this was later than normal based on COVID-19. In addition to that report in July 20, there was an update to the committee which was presented to the 30th of November meeting. And it was agreed at that meeting that the number of planned audit reviews should be reduced based on the level of unplanned work coming through to the internal audit team. It was highlighted during that report that it was very likely that there was going to be further unplanned work in the second half of the financial year, and this would have a further impact on the planned audit review and the plan for 2021. I just want to bring your attention now to page 2 of the report, which is the performance dashboard for internal audit. And I'm going to quickly just run through some of the dials and graphs recorded on that performance dashboard. If I can just draw your attention to the first speed dial, that basically is recording that as at the end of March, 80% of the revised internal audit plan has been completed. And I'm hoping that some further reviews will be actually finalised during this current month. Of the 12 reviews that have not been carried out, 9 are actually included within the new audit plan, which will be presented in the following paper after this one. The remaining 3 audits will not be carried out, and that's based on a reassessment of the plan for 21-22 and decisions being taken that other areas should be prioritised. The second speed dial on the dashboard records the percentage of audits finalised within the initially allocation of days that we've allocated to actually complete that audit. This is lower than normal at 64%, and this is lower than previous years, the lowest we've ever had. And I think if you can remember when I reported back to committee in November, I actually stated then that the pandemic and remote working had quite a significant impact on internal audit work. And that in terms of both efficiency and effectiveness of audit work under remote working. And this will figure in the Chief Audit Executive's opinion at the end of this report. In terms of the speed dial number 3, customer satisfaction, we have generally received very good feedback from audit clients. And what I've tried to do is just show you some examples of the comments which have come through in the electronic questionnaires. And I think that does demonstrate how well the team have worked with clients during a really difficult period in terms of carrying out audit work remotely. Speed dial 4 records a high percentage, and that's 92%, of high risk rated recommendations being found to have been implemented during the follow-up exercise. We've also scheduled a number of follow-up reviews, which were originally scheduled for 2021. And these actually include some of the high risk areas, including part traded service, safer recruitment, and CCTV business operations. All of those were assessed at level 2, which were weak. And I'm hoping to carry out those within the first quarter of 2021-22. You'll note from section 6 and 7, focusing very much on section 7 in terms of investigation, the number of investigations carried out by the Internal Audit Service in 2021 has been exceptionally low. We've actually just got 1 recorded on the system. Internal whistleblowing cases were also very low, which is again unusual. However, there have been quite a number of external submissions coming in through the whistleblowing line, and many of these around, for example, COVID-19 business grants. And these are being investigated by other service areas that we refer them to. You'll note that on section 8 of the dashboard, that records that we've carried out over 328 days of unplanned work, which is significantly more than previous years. And obviously this unplanned work directly impacts on the time that we spend on planned audit activity. As I advised the committee back in November, there has been a significant level of unplanned work, and this has also continued into the second half of the year. Basically, all of that unplanned work has some reason to be connected to the pandemic itself. The pie chart and speed dial in section 5 of the dashboard provides a summary of 14 audit reports finalised by the end of March 2021. One of these was a contract management review of the iDocs IT application, and section 3.8.3 of the report records the actual weaknesses related to that report. Another audit carried out during the 2020 internal audit plan review year was property compliance, and this was only just finalised this month, and this was also assigned a level 2 weak limited assurance rating. Property compliance, this includes the management, and I'm going to give you some examples to give you a feel of what property compliance is all about. For example, water systems and the prevention of Legionella, the safety of electrical and gas systems, asbestos management, and also fire safety management are key components within property compliance. This area was last reviewed back in October 2015, and at the time it was given a level 1 poor rating. This actually then resulted in management attending the March 2016 audit committee, and the purpose of that was for management to present their planned response to the audit findings. The March 2016 the attendance at the audit committee was part of the audit follow-up activity, and both the committee and the internal audit team were provided with assurance that appropriate actions were being taken or were scheduled to be carried out. A revisit of property compliance had been scheduled for 2018-19, but for a number of reasons, that review was postponed. The recent audit review in 2021 has identified similar weaknesses and concerns related to governance and scrutiny of the property compliance function. And section 3.8.8 of this report records the weaknesses as reported in the 2020-21 audit report. Following the recent senior management restructuring, the Council's Chief Operating Officer, Mandy Bishop, has taken a lead role in property services review, and that has actually included consideration of the findings of the latest property compliance internal audit review. Mandy has kindly agreed to attend the committee today to comment on both the findings of the audit review and also to brief members on action being taken. So, Chair, would this be a good idea to hand across to Mandy?
Yeah, very happy for that. Thanks for coming, Mandy. I think it's really good that you're here to talk to this point. You're on mute still.
I think I unmuted myself and put myself back on. Thank you, Chair. I'd like to do some introductions first. Obviously, I've met all of you, but I'd like to introduce my colleague, Alan Mccarthy, who is our interim head of property services, and I'll go through in a second what his role is. Alan is here if there's any detailed questions, because he's been helping me with some of the work to address some of the audit findings. So I'd like to say, firstly, thank you for the opportunity to speak with the committee on the actions we're taking to address the findings of the audit. We are taking it very seriously. And as you said, as Andy said, I've been asked to take a lead on this matter to make sure we follow things through. The follow-up audit does acknowledge that some action has been taken to improve compliance since 2015, and I know there's a lot of work that's been undertaken within the compliance team around areas such as Legionella, gas safety, fire and asbestos. There's also been considerable work undertaken around procurement frameworks, and we either have or are in the process of putting in place some very good frameworks around building surveying services, asbestos surveying and health and safety, to name but a few. We've constructively worked with colleagues in internal audit to start putting in place the measures to address the remaining weaknesses that were identified as part of the latest audit. And I just wanted to give you a flavour of some of the things that we've undertaken in the last few months. Alan has come on board as our additional specialist in senior management capacity. He's working with myself and reporting directly through myself and Andy Rothery, the Section 151 officers, on the outcomes to address the latest property compliance audit requirements. I'm going to take through a couple of the high risk areas and just let you know what we've done so far. So there was a section on governance, both in relation to the Health and Safety Wellbeing Committee and the property boards that were currently in place. So I'm pleased to say that one of the recommendations was actually to redraft some of the terms of reference of both of these groups. There was a Health and Safety Wellbeing Committee earlier this week on the 27th of April, and the draft terms of reference have been drafted by the head of policy and HR, who leads on health and safety matters for the authority and leads on that committee. And we are about to circulate those to the group, and I envisage those will be signed off. They've had internal audit feedback and feedback from myself as well. We have also, there was an item also in as a medium item about a roller shutter, and I'm pleased to say that that matter has now been addressed as well. The second governance issue that was highlighted was an internal officer property board. And again, comments were made about terms of reference membership and the need to review that. And with the support of Alan, we've actually got a robust governance arrangement in place now that we are about to implement as part of that process. That will again involve senior managers, the council's corporate health, safety and wellbeing officer as part of those arrangements. Other actions that we've taken, I have moved some resource around to ensure that Alan has got the relevant support. So we have got some programme and project management resource that we've moved from other areas of the council, and existing resources with both the compliance and the estates team will take forward some of the specific actions and activities that were highlighted as part of the medium risk areas in the internal audit report. Alan and I, also with colleagues in the property services, have commenced work on a review of both the construction maintenance and the estate structures, and we will be putting in some internal arrangements as part of those processes over the next 4 weeks. We've just had a recent recruitment process as well for a fire officer, though I do understand that we haven't had a huge response to that, and I do need to look at what we do next in relation to that role. There is also a high risk action that's recommended around delegation of roles and responsibilities. We were going to actually take that back to the Health and Safety Committee earlier this week. However, we have just put that on hold because we have got the AGM next week. So it seemed more pertinent to wait until the next AGM, which will include changes to the senior management structure as part of that. So we'll have much more robust governance. So by the end of next week, I will have put in an officer delegated decision once the AGM has considered the constitutional changes, and we will have those arrangements in place by next week. And that's on the advice of the lawyers as well. It's better to wait until after the AGM next week. With the support of Alan, we've currently got 2 pieces of work out to tender as well, one around the compliance work and one around the data, because what came out of the audit was some of the data requirements, and we're having to do some quite in-depth analysis as to what data we hold where and how best to actually position that before we do purchase any additional software, because until we've got that information, we're not able to purchase the correct software to make sure we've got a single access to property data sets. The other areas we are working on at present as well, which we have got some that are already reported through to the Health and Safety Wellbeing Committee, but is doing further work with the Corporate Health and Safety Manager on the risk register and the KPIs, and that is an ongoing development to deliver the dashboard as well. And not mentioned in the compliance audit, but we are about to start a piece of work around the condition risk surveys as well, reviewing what condition survey work was undertaken in 2017, segmenting our operational and commercial estate, and then prioritising additional surveys. And the aim is to get as much information about the requirements and the needs to feed into the medium-term financial strategy for 22-23 onwards. So we've got a clear understanding of the detail of the investment needs and how that feeds into our future financial planning. The committee will note as part of the next item actually on the agenda that there is a further follow-up audit planned. And that's recommended in 21-22, which I know you will consider in a moment. And we would obviously welcome external scrutiny by audit colleagues. And I've worked with them very well over the recent months, and I'd like to thank them for their support in moving this forward. In the meantime, we'll continue to progress the required compliance actions, and I'm happy to report back to this committee at a future date. Thank you, Chair.
Thank you, Mandy. Has anybody on the committee got anything they'd like to raise as a question at the moment? I've certainly got some things I can raise from the chair to start with, if that would be helpful. I mean, I think thanks for coming today, Mandy. And obviously, we find ourselves in a not brilliant position of having had I mean, I realise you detailed some progress that's been made, but to find ourselves 6 years on, having not made the required progress to have a clean audit, I think it's not a position any of us would want to be in. How are you in a position to kind of put some timescales on how long you think it's going to take to remedy this, so that we get ourselves back into a state where we would have a reasonable level of assurance around this? Because obviously we've had 6 years. So what do you think is a reasonable timescale now?
Well, I think this is an 18-month work plan, if I'm straight with you, around some of the work that's required. However, that doesn't mean we're not going to start moving forward in some matters immediately. And we're currently putting together quite a detailed project plan around that, Councillor Elliott. So I will probably in the next couple of weeks have a little bit more detail around that. But I would suggest it's an 18-month work programme to actually implement fully across the board.
Okay, thank you. Councillor Simmons, you have a question.
Yes, thank you. We listed all the safety things you're doing. Are you anything on radon gas in our properties?
Yeah, that wasn't picked up as part of this audit, Councillor Simmons. Actually, my background's in environmental health, so I've spent a long time ago, I dealt with potential areas of radon gas. It wasn't picked up as part of this audit, so I would have to find out for you what current measures we've got in place in our properties. So can I get back to you on that one?
Certainly, thank you.
I don't have any other questions in the chat, but I think I would be, I noted your offer to come back and report again. Would you be happy to, I mean, I think given the timescale that's passed, it's difficult because of the corporate memory issues. Obviously, I've only been a councillor since 2019, as has Councillor Roper, and so I think it's important we don't lose sight of this. And that, would you be happy to come back and give reports to each meeting, even if they're only brief, that we have in the intervening period? Because I think it's important that we can see progress on this, and that there's public scrutiny of the progress on it, particularly kind of post Grenfell. I think, you know, issues around safety of property are obviously extremely important. I mean, not that they weren't important before, but I think everyone can see the importance of having property compliance issues dealt with as quickly as possible. So I think if you could come back to each meeting and kind of show some progress on this, that would be really good. And we've noted the 18 months timescale. I mean, that seems, I don't know what colleagues feel, but that seems reasonable to me, given where we are.
Could I just come in there, Chair? Because I think Mandy said 18 months. I think many of the high risk weaknesses that we identify with action plans were focused on governance as well, and adequate scrutiny and challenge. And from looking at the management responses there, they're much quicker than the 18 months.
Yeah.
So when we're talking about the property board, the health and safety wellbeing steering committee, assigning roles to individuals, and really in terms of assigning roles, that is very much to protect the council's chief executive. So for example, in terms of corporate manslaughter, you would expect roles to be assigned to individuals, and for the chief exec and the scrutiny bodies and governing bodies to keep a close eye on all of that. And the management response does say on some of them the end of April 21. So I would hope that within the first half of 21-22 that we will be going in, checking off those high risk weaknesses and the recommendations to verify that action's been taken.
Sure.
And Chair, we've already started those as well. So the terms of reference are drafted. I envisage with the Health and Safety Committee, those will be signed off within the next couple of weeks. And as I said, the the actions around allocation of roles and responsibilities as well will be undertaken by the end of next week. So I'm quite happy to provide an interim update around the high risk activities, which obviously we are focused on as well, if that's helpful.
That would be really helpful. I think we've got, is it 3 high risk exposure items? It would be good to have those mitigated. I mean, you know, I'm sure you know this, but it would be good to have these mitigated as soon as possible. Jeff, were you? Oh no, John. Sorry, John.
Yes, just a quick question directed at Mandy. You introduced Alan to us, highlighting he's in an interim role, and the delivery of the complete project is estimated at 18 months. Are you sure that should Alan leave part of the way during that 18 months, that the ownership will be vested in a formal successor, rather than being too reliant on Alan as the driver of the detail of the improvement? I'm well aware that sometimes when there's an interim in a key post, that should that interim move on, not always an equivalent trail or successor arrangement in place. So can I just put that up as an issue? I don't necessarily need an answer right away, but perhaps you could come back to that if you're going to do periodic progress. Thank you, Chair.
Thank you, John. Are there any other questions? Oh, Jeff, you're waving at me.
Yeah, so I was just going to add that I'll keep in close contact with Mandy to ensure that we can identify when appropriate updates will be meaningful to the committee, so that we can decide whether that's either a verbal update or a formal report is needed. So so you can be sort of feel assured that from an audit perspective that we'll be keeping close in contact with both Mandy and Alan to ensure that the committee gets the right assurance at the right time and doesn't need to wait for any extended period of time to get updates.
That would be great, thank you. And obviously I'm happy to receive a verbal informal update at any point if you feel that's appropriate. Does anybody else have any further questions on this? Councillor Roper,
the substantial amount of unplanned audit work, 330 days. A lot of it's due to COVID. Obviously, a huge drain on resources that wasn't budgeted for. Do you see that continuing on at that sort of level into this year? And what are the resource implications for your normal audit processing of losing that amount of time to unplanned work?
Yes, it will continue. It is continuing at the moment. I think I mentioned back in the November meeting of the committee that a member of my staff is pretty well seconded to one team in terms of adult social care and helping them to manage and administer the social care grants going to care providers. He's basically seconded for 3 days a week, which is a major strain on our resources. But we're also actively involved in other COVID grants. So, for example, small business grants, retail, hospitality and leisure. And then we've got a lot of time in the plan, which will be coming on in the next report to this committee, is about the 21-22 plan, in terms of looking at the other areas of COVID grant funding, for example, homelessness, education, school meal grant payments, and the government is still releasing funding. So, for example, the individual seconded to adult social care, we thought that was coming to an end, and then they just released another tranche of funding, and that just carries on. And we're not too sure where we're going in terms of the pandemic over the summer months and then into the winter. So I'm very sure that there's going to be a lot more unplanned work to be carried out in 21-22.
Yeah, we're coming on to the internal audit plan next, so I'll save some questions on that until that item. But on the unplanned work, I know you noted IT cybersecurity on the unplanned work taking significant time. Can you just outline what you were Was that to do with home working? Was that to do with, moving to Zoom meetings? What was that?
No, there were directives and letters coming from government departments and the National Security Cyber Centre on IT cyber risks and scammers taking advantage of the pandemic, and also to actually come in and try and access our systems. So we started some work there, and I don't know if Jeff wants to add any more about the SOCOTIM review, which we basically shadowed in terms of what they were doing there.
Yeah, so just to add some extra context to that. So in addition to the sort of significant amount of COVID related work that's connected to a lot of the grants and assurance work, which will carry on into 21-22, a number of local authorities were subject to significant cyber attacks during the autumn winter period last year. In fact, there was one in one of the London boroughs. And as a result of that, the Cabinet Office and the National Cyber Security Centre wrote to all chief executives of local authorities with a series of questions that they directed to their IT function to assess their readiness in relation to some very specific risks in the cyber field. As part of that work, we also commissioned help from SOCOTIM, which is the leading consultancy organisation for the public sector, to carry out an in-depth review of our security arrangements as well. And connected to that, we used internal audit resources to work with SOCOTIM as part of that review. So that's why Andy referred to what was quite a significant piece of work that took place over the winter period, and will continue, frankly, through 21-22. There's a significant amount of work to do. It's a very fast-moving field with a lot of potentially significant risks. You may have heard of a number of cyber attacks on big multi-academy trusts in our own area, or on our neighbouring authorities area in recent times. So it's an area which we need to dynamically move to as an internal audit function to ensure that we're carrying out the right coverage at the right time, which is why ultimately you will get a lot of what we call unplanned work, which replaces some of our planned work. So that hopefully gives you a bit more of an in-depth answer.
Yeah, thank you. And with regard to unplanned work, how much time do you allow for unplanned work? How much planning do you do for the unplanned work?
There's always been this dilemma whether you retain a contingency sum in your plan. We'll come on to this in the next agenda item. Sure. Or you basically allocate all the work to audit reviews based on a risk assessment, and you come up with a long list. And as unplanned work comes in, it just chips away at the bottom. And that's the way we're operating this year, which I will come on to in the next agenda item.
Yeah, lovely. Has anybody got any further questions on the annual report for last year?
So sorry, if I could just come in. Yeah. Sorry, Mark. Sorry, Chair. I just need to add one final comment before any kind of summing up done. So just bear with me. So I'll just flip back to the papers.
It's on page 9.
Yeah, I'm just trying to exit my screen so I can actually see the papers. Bear with me a sec. So in terms of your papers, in terms of I think we're at page 19. When we prepare an annual report, we also have to give, or I have to give as the head of internal audit, a formal opinion on the internal control framework and risk management framework. So page 19 in section 3.11.2 lays out my formal opinion. So in most years, this is usually a reasonably straightforward opinion where your work identifies that you do have reasonable assurance. Obviously, we've gone through the last 12 months where we've been working remotely and carrying out our audit work remotely. And when we reported to you back in November, we discussed how that can have some limitations on the level of assurance that we're able to give on certain areas. So the way in which we test things, the way in which we assess risk will have limitations in the fact that you can't physically see certain things and you are reliant on working in a very different way. So the opinion there lays out our view in terms of the state of internal control within Bath and North East Somerset, and we've also worked closely with our national networks, SIPFA and the Institute of Internal Auditors, to understand how that opinion should be phrased and based on this being such a unique last 12 months. So I'm not going to read out the whole statement, but the sort of key aspects are probably in paragraph 3 of 3.11.2, where it indicates that where remote working, where it has continued throughout the year and coupled with a high level of unplanned work, where there has been changes to the schedule of planned work, which is what we've just been talking about. There is the potential to consider whether a limited or qualified opinion should be given. But the guidance states that if the audit committees agreed to the change plan, which is effectively what we talked about, we changed our plan last November, October, then there isn't a need for that limited opinion. Then your limitations will only then reflect the work which has been detailed as agreed. In other words, all the work which you've seen detailed within this particular report. So it's my view that based on that work and considering all the other assurances I can take from the internal control framework, that the systems to manage risk are reasonable. And I give a little bit more detail below in the relevant bullet points. So I just wanted to bring that to your attention because that is a formal opinion I'm required to give on an annual basis. And it's one that both our colleagues in external audit would want to see and hear as well. So I just wanted to sort of add that in before any sort of final closing remarks on this particular item. Thank you.
Thank you, Jeff. And noted, and thank you for your, well, thank you to you and all of your colleagues for the work over the COVID period. I realise it's not been easy for anyone, has it? So does anyone have anything further they'd like to add? I think Councillor Blackburn was actually trying to ask a question, but is now dropped off the meeting. He's been having a little difficulty with his connection. I think he is not at home. So yeah, he is no longer present in the meeting. So we will, I don't think we're required to vote on anything or for that item. So we will move on to item 9, which is the internal audit plan for 21-22. And again, could I go to Andy Cox to present that report?
Thank you, Chair. In line with the public sector internal audit standards, we're required to prepare an audit plan every year. And also we're required to maintain an internal audit charter. So in terms of the internal audit charter, that's Appendix 2. And under those audit standards, we're required to review that annually. I've carried out that annual review. There were very minor amendments to be carried out just in terms of job titles and things like that. So I've carried out that review. I've made some very minor amendments, and that is now Appendix 2 for your approval. So we can come back to that at the end of the report. The most important thing is the audit and assurance plan, and that's Appendix 1 of this paper. As I stated earlier, well, first of all, just in terms of that plan, I've gone through a lot of consultation in terms of preparing this plan. That's involved statutory officers, directors and other senior managers. As I've already stated during the previous agenda item, a significant portion of the plan has been allocated to review an activity related to the council's response to COVID-19. including, as we stated, the review and administration of management of government funding and the grants actually provided by government to the local authority, sometimes to passport on to businesses, etc. In addition to the core audit plan, which consists of audit work resulting in a formal report. And sorry, I'm just bringing your attention to Appendix 2 here, where it outlines at the bottom 36 audit reviews. In addition to that, we will carry out other work related to governance, fraud, and also risk management. And we also carry out follow-up activity of reports. So, for example, we were discussing the property compliance review earlier. That is something that we'll be following up during the year. As we actually stated in the last paper, it's very likely that there will be more unplanned work, such as investigations or anything to do with COVID in terms of grant administration, etc., or scrutiny and challenge of that. And therefore, as we stated in November, this plan has to maintain some flexibility and be kept under review. And what we will do is then report again to this committee at the half-year point to report back to you on what work, unplanned work's been carried out, etc., and how that's impacted on the plan. And as I said earlier, we don't have a contingency. We have a fully resourced plan this year in terms of the items we're going to carry out. And if we get unplanned work coming in, it will just take away audits from the bottom end of that. If there are any questions at all in terms of the plan itself, the items in there, or any items that you consider that are missing.
Anybody have any questions on the audit plan? And getting lots of shakes of heads. Just to confirm that the audit plan as listed, is that's in priority order, is it?
It is. Yeah.
So the stuff, the things at the bottom are the things that will be first to go when unplanned things come in.
It's always difficult, Chair, because things change during the year as well. So if something bubbled up in a particular area, which I've assessed initially as lower, then we might decide that that should come up the rankings as such. So it is a very flexible plan, this. And things change.
And I think just to add to that, Chair, anything is in the plan is high priority. So it's a relative statement, you know. So everything is high priority. It's just that some are scored slightly higher than others, but you know, we ensure that there are no low risk items in that audit plan. You know, this is all about the things which we feel need to be covered this year for a variety of reasons, and all as a result of the consultation process we went through, both with this audit committee, both with senior management, and then through our risk assessment process and our reasonable assurance model as laid out in the report.
Okay, which I guess does beg the question of given that we've just acknowledged that some of these items will drop, whilst they're all high priority, some of them must be higher than others, I guess.
yeah, and in a sense that's why risk is dynamic and moving. So that's a list which may be in a priority order right now. That doesn't mean that's the list which will be in the same priority order in 6 months' time or 4 months' time, because things will move. So we have those conversations both internally, both with the Section 151 officer, potentially with the Chief Executive or Chief Operating Officer, and also with yourselves as the audit committee to understand why we took something off and replaced it with something else.
Sure. John, you wanted to ask a question?
Muted. Quick, just picking up on your point, Jeff, and also Andy's earlier comment. Is it from the system when you prepare your risk league, if I can call it that, after you've crunched the data, which actually identifies the sort of risk ranking, does the system provide a trail of how respective risks have changed over a particular period? Because if it does, it might be useful to share that with the committee at some point to demonstrate how your flexibility responds to perceptions of changing risk over any given period. Clearly, COVID has distorted more than any other time in recent years, I guess. But it's a sort of a history trail of how you get to, say, the top 10 risk factors, which then influence the detailed allocation of programmed work.
Yeah, so if I dive in there first, and Andy can kind of add any other sort of contextual information, I suppose part of my answer to that would be that nothing stays the same. Everything moves, and actually sometimes the focus of our audit reviews change quite significantly from one position to the next. So there may be items in there which we've never covered in that way ever before. Yeah. So if everything stayed the same all the time, trend analysis around that is very helpful and useful. If you're auditing a payroll system, it's fixed. You're always auditing a payroll system. You're always kind of looking at the same thing. If we're looking at climate change, or we're looking at future transportation, or we're looking at a major project, all of those things are quite fluid. So trend analysis has quite a lot of limitations about it, but it is a helpful point. And we do have, and we keep historically all our risk assessment processes so that we can do that. It's just often you end up kind of comparing apples with pears quite a lot of the time. Yeah, and so it has kind of limited value. It helps, but not hugely.
Yeah, I think, I know you've mentioned this before when we've discussed the audit planning, that at the end of the day, there's some element of reality checking when you apply human awareness, corporate knowledge, historical influences and so on, rather than just be completely driven by data from a planning system, planning process.
Yeah, exactly right. And actually, we do have a factor which we don't call it sense checking, but we do have a factor at which we look at that and say, is that real or not? Is the data misleading us, leading us to looking at the wrong thing? So that we do, in a sense check that list. So that enables us to make sure that the list remains real, that the audit plans remain real, and they remain relevant for the organisation. So yes, is the answer to that.
Yeah, no, that's good. I mean, to me, that's an ingredient of sound professionalism. Yeah. Okay, thank you, Chair.
Thank you, John. Any questions for anybody else on this year's audit plan? No? Okay, so obviously we'll look forward to hearing updates on how that progresses through the year and how much unplanned, planned, unplanned or otherwise work comes through. Good. So we're on to item 10.
Is there a need to approve the plan there?
Oh, sorry. I do apologise. We do need to actually vote to approve the plan. Can I have a proposer that we approve the plan? Councillor Simmons, thank you very much. John Barker, independent member, is seconded. Can I just see I ought to go around the room, actually. I ought to do this properly. Can we go around the room and just check that we all approve the plan? So John Barker, you proposed it. You've seconded anyway. Councillor Simmons?
Yes, approved.
Councillor Roper?
Approved, yeah.
Yeah, and myself approved. So thank you. That's passed. We are approving the plan. Thank you very much for your work on that. So we move on to item 10, which is the external audit update. I'd like to invite Peter Barber, from Grant Thornton to present that report.
Thank you, Chair. Good afternoon, everybody. Today we have 3 items on the agenda. The first of which is our annual audit letter from last year. This is a slightly different document in that it is aimed at a slightly different audience. It is aimed at your stakeholders, and one of the things we do encourage you to do is to make this available on your website. In terms of the findings, I'm hoping that there's nothing of any surprise in here, because it essentially sets out in a little bit more of a summarised version the findings that I presented at the last meeting of this committee back in February. The main findings are set out on pages 49 onwards under the executive summary, and essentially confirms that we gave a clean opinion on your financial statements and VFM conclusion. In terms of the remainder of the report, as I said, Chair, I'll take it as read, and it has, as I said, it is a summarised version that we've covered previously. The only thing that I did want to bring to members' attention was the final proposed fees for both the council and pension fund for last year. So if I refer members to pages 25 of my papers, which is, I think it's 71, thank you, Chair, of your pack, you'll see the history of the changes in the fees. So the scale fee for 1920 for the council was just over £95,000. When we presented our plan, probably about 12 months ago or even longer now, to this committee, at that point we proposed a number of uplifts that are set out at the top of this table, that were discussed and agreed in principle, and those were essentially default uplifts that had been agreed with public sector audit appointments in the areas of increased focus and risk. Since issuing that plan and the outbreak of COVID, clearly COVID has had a significant impact on delivery and resource input, and that's been discussed at length at previous meetings of this committee. And in addition to that, at the planning stage, clearly we weren't fully sighted on whether the accounts for 1920 would have aqueous, ADO and ACL consolidated. Decision was taken by finance officers to consolidate that into the main accounts. We concurred with that view, and that resulted in a large number of additional procedures that we had to undertake. The combined effect of that is a proposed further uplift in addition to those additional fees proposed at the planning stage of just under 20,000. That brings the final proposed fee up to just over £138,000. As always, this fee is subject to sign off and approval by public sector audit appointments, and no additional fees will be billed until that's been received. Given the amounts involved, clearly PSA are after the evidence to support the need for this work. That has been submitted to them, and they're currently considering that before final sign off, and I will update the committee once I do receive that from them. A similar scenario for the pension fund, where the detail is set out on page 74 of your papers. An initial fee of 22 up to just over 26 at the planning stage, with a greater focus in the main on your level 3 investments. And we're now proposing a further increase in addition to that initial planning uplift of £6,000, £4,000 in relation to the additional work driven by COVID, but also the fact that we've actually given your increased levels of derivatives in your pension fund, or in Avon pension fund in 1920. What we did do, given the inherent risk within their valuation, is we brought in some expertise from our valuations team in London to independently value those and gain assurance over their fair value disclosures in the accounts, and that was an extra £2,000, bringing the total figure up to £32,430. So I'm conscious that has been an area of discussion in the past of this committee, the additional fees, recognising that the additional fees have now been in place for a number of years. So Chair, I'm happy to stop there in terms of the letter, take any questions on any of the content, including the fees, if there are any.
Does anybody have any questions? Thank you very much, Peter. Anybody from the group have any questions on that? No, I'm not seeing any hands raised. I guess around the additional fees, can you just articulate a little more how those are, how the work behind those is verified? I mean, how is the auditor audited?
So give or take, there's about 500 councils and pension funds out there, of which I think all bar 8 are their auditors are appointed via public sector audit appointments. So public sector audit appointments are responsible for 490 plus councils and pension funds, and each of those has a scale fee that is a historic figure dating back many years. When the contract was first let, clearly things have moved on in terms of complexity of accounts and regulation in terms of challenge of the scope of an audit. Public sector audit appointments are cited on that, and there's been recent comms from them regarding the need to uplift these figures, these scale fees, but there's a lead-in time to do that. So in the intervening period, what they do is they allow auditors to submit additional fee requests in areas where it's appropriate, and they challenge that. So what they will be doing in some of the areas, such as on the council, the increased work that we do on land and buildings, investment properties, your pension liabilities, there are expected uplifts across every council that has those entries in their accounts. It's fair to say they vary depending on the size of your portfolios in those areas. And in some areas it will be, or for some councils, there will be uplifts in specific areas that are unique to that council. So I gave an example earlier of aqueous and the fact that that's resulted in you producing group accounts for the first time in 1920. And what I'm required to do there is go into a bit more detail with PSAA about why this resulted in additional work. And I will have done that over the last few months, and that will include the fact that there are additional primary statements. We have to engage with aqueous's own auditors to check their work in certain areas. So I would submit that, including time analysis for PSAA to approve. When we come on to the next item on the agenda, the plans, you will see there are some further uplifts in there that are proposed at the planning stage in areas like value for money. And I've trailed previously the value for money changes under the code. And once again, PSAA will be looking to what they call bake them into scale fees going forward, but they're not able to do that until 21-22 at the earliest. So once again, we have the scenario where that's another area, for example, where we as a firm across all our local government clients are proposing uplifts to accommodate the VFM work. All the other firms that provide external audit across the sector will be doing the same, and PSAA will need to make a judgment call as to whether they think those are appropriate once we complete the work.
Sure. Okay, thank you. Which, if nobody else has any questions on that report, I think probably makes sense to move on then to the plan for next year, for the coming year. Is everybody all right with that? Yep, good. Okay, so yeah, Peter, if you'd like to move on to the plan.
Okay, yep, thank you, Chair. So there's two plans here for 2021. The first one being the one for the council that starts on page 77. And this has been trailed at previous meetings of this committee. And I've mentioned previously that in any normal year, I'm conscious we're now into 21-22, and you are just at this meeting receiving the 2021 plan. Yes, audit is a retrospective exercise, but we are not where we would want to be nationally, as are none of the other firms as well. We're probably at least 2 or 3 months behind in terms of the normal audit cycle. And that's because we still are, as a firm, and as are the other firms, there are still a small number of 1920 audits outstanding that has been taking up an inordinate amount of our resources over the last few months. So you do have the plan here, which is obviously better late than never, and it sets out our approach to discharging our responsibilities for 2021. In terms of the opinion, the approach is going to be reasonably similar to the exercise we've just gone through for 1920. So on page 80, we have the main headlines. Once again, we are assuming that the group audit will be required in relation to aqueous. In terms of the significant risk areas, these will follow a very similar path to last year. It will be your land and buildings and your investment properties again, which will take up a large element of our inputs. So that, you have a very large figure at the top of your balance sheet for that, and that will be a focus. And obviously there will be focus again on the pension fund liability at the bottom half of your balance sheet. That is a big liability, and it will be the default areas of management override and revenue recognition in terms of your investment estate that will focus our other areas of audit procedures. Everything we do is driven by materiality, and we've proposed a materiality figure for the forthcoming year of just under £7 million. So any item of account or any entry in your accounts for 2021 above that figure will be subject to a series of audit procedures. And I used to broadly indicate that, you've got the opinion, you've got the VFM, it's roughly 70-30 in terms of our split of input. I think that's changed for 2021 onwards with the introduction of the new value for money code. I would say it's probably a bit more 60-40 now. Value for money will be very different from 1920 in 2021. There are new areas of focus, and these are set out in the plan. And then to inform this plan, we've already met with the chief exec and the leadership team to discuss arrangements and the position against each area. So just briefly, financial resilience. This is probably the area that is most akin to the old VFM, where we looked at your arrangements for budget setting, monitoring, reporting, delivering a balanced budget, your medium-term financial planning. You know, our reflection on the council is probably quite similar to that of other councils in that 2021 was a better outturn position than was perhaps expected at the beginning of the COVID outbreak. There were some pretty scary numbers being bandied around in terms of potential gaps when COVID first started, not least this council, given your high dependence on income from your investment property portfolio. As clarity emerged from central government about funding to support that, I think the concerns eased somewhat, and there were some late grants and additional funding received that really helped you out in terms of 2021. Clearly, full council set the budget for 21-22 in February, and there was a bit of certainty around that in terms of government funding. And I think for 21-22, you know, we're reasonably confident that that's a deliverable budget. And then there's lots of uncertainty from 22-23 onwards, and that's where the real concern is, and that's where some of your bigger gaps come. So what we will be doing is challenging officers as to how they are, with that limited information, planning ahead, re-engineering service delivery to make sure that services reflect the changing needs of your public but remain financially viable. So that's the first area of VFM focus. The other two areas, governance. Clearly, that's a key role for this committee, and we will be wanting to engage with this committee further over the summer period to understand arrangements. I think governance arrangements are generally well defined in local government and at the council. I think they become a little bit vaguer and greyer when you look at arrangements with partners and with, you know, some of your companies and your wholly owned subsidiaries. And the challenge for the council is to make sure that governance arrangements are effective, but they're proportionate, so that there are government arrangements, but they're not overly bureaucratic and they don't stifle innovation. And then the third area is economy, efficiency and effectiveness. And I think this is probably where, as auditors, we have the least information about arrangements at the council. So this is all about your performance management arrangements. It's how you know where you're performing well, what KPIs you use, how you use benchmarking to assess where you are against peers, how you're learning from other councils, how you're sharing best practice, etc. And that's an area that we will be working with officers in more detail on over the forthcoming months to inform our assessment in each of those three areas. And that will be something that we will be bringing back, obviously, later in the year, hopefully, in terms of final findings, recognising value for money will be different this year because there will be no binary black and white, you do or you do not have arrangements in place. It will be more of a judgment, it will be more of a story, identifying areas of best practice, but also coming up with recommendations for further improvement. And as I trailed, that there is an impact of that additional work on the fee. So once again, I'm just going to go down to the indicative fees for 2021, which are set out on page 93 of your papers. You'll see lots of the increases against the scale fee again that have basically rolled forward and are ongoing, but you'll see some pretty significant additional fees going in for increased auditing standards and the value for money work for 2021. And I've had lots of discussions with lots of committees about the extent of these increases. As I said earlier, they are subject to PSA approval, and obviously in recognition of that, MHCLG have recently announced that they are making £15 million available to public sector to fund these additional costs, although I'm conscious that they have not finalised how those will be distributed. So that is my summary of the plan for the council. Happy to take any questions, Chair, on that before I move on to the plan for the pension fund.
Thank you. Anybody got any questions before I jump in myself? John? You're on mute, John.
Still on. There we are. I've got papers on my keyboard, I think. Thank you, Chair. Thank you, Peter. Could I just turn to page 80, your introduction and headlines, and your summary of the new value for money arrangement. How much local discretion do you think will evolve as the new code of practice arrangements starts to develop? You may remember I raised a question when you introduced the changes at the last meeting, and asked if it was possible to create a dialogue with you as the appointed external auditor to identify and share ideas about how value for money arrangements could proceed on particular topics.
So the discretion, they are quite broad headings, but there is supporting guidance from the NAO in the form of what they call AGN 03, which is quite a helpful document that sets out the challenge areas that we as auditors need to focus on. So for each of those areas, there is a series of questions that we need to gain answers to and be able to comment on and assess. So John, just in terms of when you say discretion, there is no discretion in terms of actually whether we do all the three areas. So we will have to undertake work in each of the three areas. We will need to report in each of the three areas. When you say discretion, I suppose, you know, the discretion is the extent to which each of those areas need to be looked at to arrive at a judgment. And I suppose that is why the plan seeks to identify the areas of greatest risk. So, you know, if there is a particular area within those three criteria that we believe is a particular area of concern, we would want to be flagging that up at the early stage, and we would invariably be devoting a greater slice of our resources to understanding that in more detail so that we can fully articulate our assessment and where appropriate, where you need to improve.
Right. Okay. Could I just follow up on that? The 3 bullet points which you've included in your report, are they replicated for other clients in the order, in the risk order which you've identified here?
I suspect not. I think these are specific to Baines. I suspect that the medium-term financial planning element is probably in various disguises very similar, because I doubt that there is a council out there that it hasn't been affected by COVID and austerity that's been in place for many years and is struggling to balance the books in terms of the ever-increasing expectations of the public, reduced central government funding, increased unit costs. All those are factors that all councils are facing. Although I do think it's fair to say that there are some, dare I say, little district councils on the south coast that are sitting on very large levels of reserves that have a little bit more flexibility and are able to be a little bit more generous. Whereas I think unitaries like yourself and counties, where they have demand-led services of adults and children's, are under increased pressure and finding it increasingly hard, relatively speaking, to deliver against budget. So that first one, I think, is relevant to all councils. I think the COVID-19 issue is a bigger issue for Baines than most, given, you know, if you look at the percentage of your income that is sourced from your investment property portfolio, it is greater and significantly greater in many cases than your peers, and therefore you are more vulnerable there to that the council not recovering its position there in the shortest possible time and actually bringing that money back in again, combined with all the uncertainty that exists from government about whether they will continue to fund any loss of income into the short and medium term. So that is probably one of the reasons why we've got that in there. And governance arrangements, we are conscious that, you know, you have as a council sought to look at alternative service delivery models. So AQUIS is an example of that. We recognise that you are working with the combined authority, and all of those necessitate slightly different ways of working with different governance arrangements, and clearly those are some of the reasons why we've referenced governance in there. And the third point really links back with the first one, and I've sort of covered that already in terms of how you recover from that, predominantly from a financial perspective.
Okay, that's helpful. In terms of the feedback from the work which you're doing, would you anticipate that the exercises would proceed concurrently, or will they be allocated over the next 12 months in a predetermined timescale? I was thinking the practicality for that, if there are key issues, whether you felt it would be appropriate to make some sort of interim feedback to future meetings of this committee.
So, and John, I don't know if it's a leading question, because I know you may well be cited on this, but there's been a very recent announcement by MHCLG that, given the quantum of work involved in the new value for money criteria, that an extension has been granted for the delivery of the work for a further 3 months. So there is a later deadline of the end of December now for this work. Clearly, if we don't get it done against the same time scale as the opinion work, we will want to be making some observations at that point, particularly if there are any areas of concern. And I suppose, given that it is a new criteria, what we will want to be doing is sharing our findings early with officers and then with yourselves, so that you've got early sight and indications of where we're going on this before we finalise the narrative in our final audit findings report.
Okay, no, I think that is helpful, because clearly value for money exercises may have a value in having an extended period of engagement. I think going back to my professional experience, that it is slightly different from the rather compartmentalised timetable for each cycle of annual accounts. So I think it'd be interesting if in an informal way, if you keep the committee briefed as you feel appropriate, then it's up to individual members of the committee perhaps to question or comment on work in progress, as it were, if you feel that's an appropriate opportunity. But clearly the protocol is likely to take a couple of cycles to settle down properly, I guess.
And what I would say, John, is that the encouragement is that where there are areas for refinement and improvement, that we make recommendations, and that's set out in the plan as well. And by definition, if we do make recommendations, and I suspect we will be making recommendations at all our local government bodies, it will be an onus on us to monitor how those are being responded to, and comment on how they are being addressed as we move through the audit cycle.
Okay, no, I think that's very helpful, very, very encouraging, Peter. Thank you, Chair.
Thanks, John. And just so obviously the value for money work is, as you say, is new, and as John just said, it's likely to take a couple of cycles to settle down. But how clear are you on at this stage about how that is going to work during the year? Because from the question John was asking there, it doesn't. You were saying kind of, if it doesn't fit into the normal schedule of work, then it might need to extend a little further. I'm just thinking about the planning with our own officers. Obviously, they need to plan. They need to know when things are happening, when they need to make people available. How clear are you right now on how this is going to work and who's going to do it? And
So in terms of the detailed work, myself and the DT's on the call, as well as the manager, we've been working through this already. So we've had some setup meetings already. I've met with the chief exec already to discuss this. We've sent the information request now, and our intention would be that we will want to be doing the bulk of this work in July and August and September, and that is our aspiration, and we're still working against that timeline. It depends on a number of factors. Will we be working remotely towards the latter part of the summer? Will we be able to come back in and meet face to face and with various groups? We will absolutely be looking to engage more widely than we did under the old VFM approach. So, you know, yourself as chair of the audit committee would be a key person we would want to engage with to get your perspective on how things work, particularly from a governance perspective. Those all still need to be booked in and arranged. And once we've had the information request response back from the council, we might be able to glean a lot of our evidence from that, but invariably, having digested that, we will have to supplement that with interviews of key individuals and groups to triangulate what we're finding.
Okay, thank you. And so I'm just kind of, you know, you've come up with some new fees for the value for money work. So there must be some correlation between how much work you think you're going to be doing and how much and who's doing it, and kind of what that fee level is. I'm just kind of trying to work out, yeah, how detailed that, how sure you are basically about how this is going to work.
So we have a project, you know, recognizing we have of our 200 local government bodies, you know, 25 of them are pension funds. So we've got 175 councils where we're doing this work. So as a firm, we've been employing performance specialists to come in and supplement this. We've got local government advisory colleagues that are coming in and doing benchmarking and crunching the numbers. That's all in process at the moment, and that will be used to challenge, you know, some of the views that the council may have about where it's performing good, bad, or indifferently. And there is an element of unknown. I'm not going to, you know, it's a new area for us, and we've had training. We've clearly looked at the guidance, and we recognise that this requires specific skills. There will be a much richer skill mix used in delivering it, and we are resourcing up to that. But we think that the comms that we've had with the NAO about delivery of this, as have the other firms, you know, invariably may have resulted in the recent announcements about there being extended time made available to all firms to get this work over the line in year one, because there is a recognition that it is considerably more involved. We are planning. We have a project plan. We have allocations and timing, but I suppose until we start looking at the response to our initial data request and evidence request, and once we start getting into the detailed meetings, we aren't fully clear on the exact timing of the completion and the extent of the work.
Okay. And actually, I guess on the issue of timing, obviously we had some considerable difficulty this year with the accounts and the timing of the accounts sign off. I think I'm right in saying that the target for that this year is September rather than July or whatever it was last year, I think. Is that correct?
Correct, yes.
How confident are you can hit that?
So we are very clear that we will not hit that deadline for the majority of our audits in 2021. We suspect that Baines will be one of those that will miss that target. And what we will be doing is liaising and engaging with officers to decide to agree what is deliverable. And we are hopeful that the opinion at least can be brought forward considerably compared to last year. But as I said, this opportunity to have a later deadline for the final work on the VFM does provide us with a bit of a flexibility should we need it.
Sure. Okay. I'm just conscious that the delayed timescale on the accounts last year did cause our own officers obviously some considerable difficulty in engaging with you over a prolonged period, and obviously adds to our cost internally. Yeah, how are you planning to kind of work that with our officers? Because obviously
we've discussed this within the plans. So then within the respective plans, we've indicated the initial timelines. The priority, we will be prioritising the pension fund over the council, because the pension fund work has to be complete before myself as the pension fund appointed auditor can provide letters of assurance to the admitted bodies, one of which is Baines. So no admitted body to the pension fund can have its audit signed off until the auditor of that admitted body has received a letter of assurance from me as the pension fund auditor. So the pension fund last year was done, you know, within the, it wasn't done by the July, it was done by the September deadline, and is well rehearsed. That will be where our resources go initially, and then it will be the council, and the council, you know, we've had chats with Andy about what is deliverable, and what we don't want to do is promise a delivery date in accordance with the deadline and then slip again. So we have, and it's on page, let me just find it, Chair, if I may, in the papers, just find it. It's on your page. Let's have a look. Trying to find it now on the right page. Bear with me. On the wrong report. So on page 91 of your papers, you'll see that the indicative timing is that we would look to bring the findings to the October meeting of this committee, which I still think is quite ambitious. I think it's a stretching, but I still think at the moment, all things being equal, it is deliverable. That is our timeline that we're working to. You'll see that the equivalent of that analysis in the pension fund, which is the next report I'm going to cover. Once again, I'm just going to check on the pages for that one. On page 110, has a slightly earlier deadline of September. So that's what we're working to at the present stage, and that's been discussed with officers.
Okay, Jeff is waving at me to ask a question.
Yeah, it's just in a practical perspective, Peter, is just obviously we arrange our audit committee meetings around some statutory work and non-statutory work, and obviously one of our meetings is focused on the approval of the accounts, which obviously was last year was 31st of July, which then got moved subsequently. This year would have been the end of September, but you're obviously indicating that would be not advisable. So we're obviously trying to decide our future meetings through the rest of the year. So is there anything you can give us that would be helpful in knowing when we should be setting our audit committee meetings in relation to a sign off of the accounts?
So I would be more than happy, Jeff, to speak to you outside of this meeting about what is a realistic deliverable in terms of not just getting the work done, but also giving, building in a bit of a contingency for getting the report out by the date ahead of the meeting itself, so that members of this committee have time to digest it in reasonable time before we present the findings. Because clearly that meeting date, that the aspiration would be, you know, having learned from last year, would be that the work is there or thereabouts, if not complete, and therefore negating the need for any residual work to be completed, and then should anything arise, then we're having to attend another meeting of this committee. So more than happy to discuss when a sensible date going forward.
Okay.
Recognizing that the September deadline that we've set ourselves, or target date for the pension fund, you know, that wouldn't necessarily warrant a meeting of this committee in isolation, because I won't even be able to sign that one off, even if the work's completed, until I've done the council as well. Yeah. But I'm happy to take that offline, Jeff, and talk about that.
Yeah, it's just important because from the sort of the audit committee's perspective, we're doing some planning with the chair, and we're also just looking at a good time when perhaps updates around progress would also be appropriate.
Yeah.
So that we can ensure that the committee is involved at the right time. So obviously this is a bit of a fluid situation. So as long as there's a sort of an open conversation around that would be much appreciated. Thank you.
You know, and we appreciate the flexibility here on this, and you know, these are conversations that we're having across our portfolio of audits, as are the other firms, and it's just a reflection that, you know, and I would say this because I'm the appointed auditor, wouldn't I? But you know, the expectations on the auditor and the amount of work that is required to be undertaken is not commensurate with the timelines that have been set in terms of delivery. You know, I think that this is, but quite rightly, Chair, as you pointed out, I also recognise that it's far from helpful having your finance team answering queries on audit queries when they should be, you know, setting the budget for 2 years hence and in your financial monitoring. So yes, it's far from ideal. But cogs in the wheel, you produce the accounts, we audit them, and we can only sign off those accounts when we're comfortable that we have all the assurances we require over all the material figures.
Yeah, sure, and certainly nobody is suggesting that the that you should do anything other than that. I think I mean, I would, from conversations with officers, I think that the ability to plan, I think, is the important thing that they would like, and so I think that the more, even if those deadlines are not as set out by by the authorities, I think it would be useful for them if they can just, if whatever deadlines, if whatever timeline you set out is the one that you can stick to, that would be useful. I think is all I'm saying.
Totally agree, Chair. And what we want to do is make sure that there's no surprises here this year, and that we are reflecting on the experience last year in arriving at what we think is deliverable for this year.
Sure. And I mean, you keep referring to other councils. We're not. Are there, with other local authorities, are you predicting not to hit their deadlines as well?
So not all, no. So I think from recollection, and this is just my recollection of the position in the southwest, where we have 50, just over 50 local government bodies. I think the latest projection is that we were looking to try being the operative word, to get 30 over the line by the end of September. I know that the deadline last year that was extended to the end of November, that position at the end of November, we managed as a firm to get 55% done by the end of November. Other firms averaged 45, and the average overall was under 50. So, I mean, that just gives you an indication of the number that missed the deadline last year.
Sure.
And I suspect, that it will be a bigger number this year that missed that deadline, given that everybody is further behind than they were 12 months ago.
Okay. And so, I mean, if you're expecting to get 30 or over that, what is it that puts us in the group that are not going to get over the line, I guess, is the obvious follow-up.
There are easier audits out there than yourselves, and that's no reflection on arrangements for producing complete and accurate accounts. It's just that your accounts are more complex than most. There are very large organisations out there, that counties that spend multiple times yourself, that have no investment properties at all. If you look at your top of your balance sheet, you have a huge amount of investment properties that involve a huge amount of work. You have more land and buildings than others. You have group accounts, and they all present us with lots of additional audit procedures.
Yeah. Okay. Understood. Has anybody got any further questions from the group? No. Okay. I think in that case, we're probably approaching the end of the meeting. We don't.
Sorry, Chair. Sorry to interrupt.
Oh, no, sorry. You've got the pension fund to do, haven't you?
Yeah, and I've got another audit committee that I need to get off to very quickly. So, if I may, can I just very quickly, because I do need to present it to you, just quickly run through this?
Yes, you can indeed. Yeah. I do. I've forgotten you've got the pension fund to go.
Sorry. So this starts on page 99, and it follows a very similar format to the council, recognising that the difference is that at the pension funds, we only give an opinion on the pension fund accounts, and there's no VFM equivalent. So the approach is very similar to last year. In terms of the focus, we will be looking again at valuation of level 3 investments. The materiality is set out on page 102 and will be higher this year, because the expectation at Q3 was that your pension fund net asset statement or its investment portfolio had increased significantly in value over the last 12 months. So that will enable us to set a slightly higher materiality. So I think at Q3 it was just over 5 billion. And obviously what we will be doing is looking to test all transactions above that amount. The plan, all the risks, the default risks that you would expect in any pension fund And obviously the fees are once again are set out, and I touched on these on pages 112, and reflect, you know, a continued uplift in fees to reflect the increased level of detail that we need to go into in the risk areas. But once again, Chair, happy to take any questions.
Thank you. Anybody got any questions on the pension fund plan? No, I am not seeing anything there. Thank you. Memphis, we don't actually have to vote on that, do we? I don't think. There's nothing kind of that requires us to.
It's just for information, Chair.
It's just for information, yeah. Good. In that case, I think we have reached the end of proceedings. Thank you very much for attending, everybody. That is the end of the agenda, and thanks to all the contributions from officers and external audit representatives, and we will speak again at the next meeting, if not before. Thank you.